And now I just want to make sure my mic is good. So my mic is good. I can see my mic moving there. Video device capture. I just don't know if you guys are going to be heard on the live, which is okay, but I want to know. Okay, it's okay. I'll leave it. Okay, so full explanation from start to finish, just understanding market structure first, and then from there we can understand why my bias is so strong, right? And a lot of people are saying sells, I'm saying buys. We'll see why we see both. I could maybe those people don't even see it the way I see it, but they see something else, and that's why they're selling, which is fine. Everyone has a different lens. But I just recently saw exactly why there was also confusion in my mind, because I did see even on the weekly, the way I trade, based on the way I trade using the weekly, I could see the range got manipulated on the buy side first. Where was it? Was it the weekly or the monthly? I think, okay, it was monthly. On the monthly, right, this monthly range right here, so this high of this candle right here, this candle right here, right, the high of that candle, and then the low, that's our range. If you're interested in how I trade, you can, there's a lot of videos on YouTube, and I'll be making a lot of videos as well. I've tailored it to my own way, but if you want to learn, it's called candle range theory. I suggest you learn from Sham or Romeo, shout out to those two. But you're going to ultimately understand that they don't give you the keys the way that I'm going to give you the keys. I give you the keys, yes, they give you the best way to understand CRT, candle range theory, but they don't give you exactly like the way I enter, the way I'm looking at my risk, how many trades I take, right? Psychology, the exact psychology and the exact conviction behind why I do what I do, if that makes sense. If you're already an experienced trader, you can kind of understand what I mean. Like, everyone has a different way of approaching, even just entering their lots. They have a different way of calculating how much they're going to be risking, and everything like that just comes into play, right? And then there's also psychology and making a plan, right? Everyone's going to have a different way of wanting to approach that, depending on their needs and their personal skills and their personal discipline level. Anyways, I'm yapping, so let's get into it. This is our range, right? Just a quick breakdown. So what we do is we look for a manipulation on either the buy side or the sell side, right? Buy side is up here. This is buy side right here, right? So up here we have buy side. I'll actually just go ahead and type that out. Buy side liquidity, right? We have buy side liquidity sitting up here, and then we have sell side liquidity sitting down here. So what that means is down here, there's a lot of people who have their stop losses down here, right? They got into buys off of this push that happened up here, but there's, their stop loss is sitting down here. So for price to go further and break this high, these big institutions want to get their orders filled down here at the best possible price, and in doing that they're going to take you out and then move price in that direction, which is why a lot of you probably see that you get stopped out and then price moves to your TP. So I suggest you learn and understand what liquidity is. I'm still working on it as well myself, but I do have the general understanding and idea of it. So up here is buy side, and then down here is sell side. Okay, so what we would look for is a sweep on either end. Whichever end gets swept first, then we go to the other end. So we can see we swept the top here, the buy side here, and then if we go down to the daily, which would have to be our time frame for entry, using time frame alignment. It's called time frame alignment. That's another thing you should understand and research. Time frame alignment. Okay. Right here, we broke out. That's what I look for. So the first time price purges the buy side, and then we would have gotten our entry right here. We would have had a limit order set, so that as soon as price came back to that area that we I don't know how to explain this. So that candle that purged the high, right? That low of that candle, once we close below it, then we can get a limit order set up. So as soon as we broke the low right here, I'll draw over it. As soon as this low, right, got broken, so we close below. Once we get an actual, when I say broken, I don't mean a wick, an actual close below. So this candle closed below, right? Just give me 1 second. Give me 1 second. So what I was saying though, yeah, so what was I saying? Okay, sorry, I'm back. What was I saying? This is, yeah, so the low got broken, not a wick, not just a break of the price, but an actual close. Not a fake. These fakes are like the sweeps that we're looking at, right? So even here would have been considered a liquidity sweep. But then it's like after a liquidity sweep, you have to know how to enter. So we sweep the high right here, and now we get the displacement, right, which is that closure, right, that break, not fake but actual break of that low. Now once we get that break, we can get a limit order set. So once we have that, we have our limit order set to tag us in once it comes up here. So price came up here, tagged us in, and then came down, right? Our target is the sell side. Okay, keeping our stop loss above this order block that we just made, right, with this displacement. I go for a 1 to 4 though, so it might be a little bit pinch, maybe not exactly above it, but just like right there. It's close enough. I go exactly for a 1 to 4 every single time. So that's what I would have had there. And then you can see that this came to the halfway of the range. That is your first target. That's where you're getting your partials. So once you get to the halfway of the range, right, this 50% of the fib, right, from this end to this end, you mark it out. Now you know that this is 50% of the range. Your fib might not look like mine when you get it the first time, because it's going to be default settings. You'll have to change the settings or keep it, right? It's going to have a lot of colors, but that green line that you're going to see, that 50, that 0.5 is the halfway. We get there, we take partials, move our stop loss to break even. So once we get there, it would look something like this. We made our money, but then unfortunately it came back and took us out. And usually when that happens, now the trade is now inactive and it will usually reverse and go the other way. So that weekly range, we came to the halfway of the weekly range. So scratch that. There's no confusion. We're not selling. I'm not selling. Some people might be selling, but I'm not selling. Okay. So moving forward, market structure. Some of you might already know what market structure is if you've already been trading, but for those of you that don't, and even maybe somebody that already do, the way I mark it out is different than most, okay? I learned this way of marking out my external and internal liquidity. Remember those two and separate the two, right? There's a difference. It's not just one type of market structure. There's external and then there's internal, right? The most important one is the external. Once the internal matches with the external, then you can understand that it is a strong bias. If the two don't match, it's okay, it's fine, right? The external is still prioritized, but you know what I mean? Like once they match, it's over, right? Once you got a clear higher highs and higher lows, for example, in an uptrend, then it's fair, right? So anyways, this high, I can clearly see was the last time price broke out. That was the last time price actually broke out and made a new high. And then after that, we never got above this level, right? So that's how I know, okay, this is the new high in the market, and this is the low that created the new high, okay? This is the low that pushed past that high, right, to give us a new high in the market. So we'll have 3 different levels marked out. We have our low in the market, we have our high that got broken, and then we have our new high. This one doesn't matter as much anymore because right before this, that was our range, right? Between here and here was our range until we broke out of the range. And if we didn't break out of the range, but we swept it, then we would have been trading our model, right? This is exactly what I mean. So it's fractal. You can look at it at any perspective you want, but you need a high and a low. You always need to know where your high and low is, and you need to understand your market structure. So anyways, that is our new high in the market. So this is our new range in the market from here to here. In between here is our new range. We don't care about what price does until it breaks this low. It is not bearish until we break this low. It might be internally bearish, right? So in here, we're internally bearish. We're unable to break this high. We're in this range right now, ranging sideways, internally bearish. But until we break this low down here, I'm exaggerating. Until this low gets broken, then we are still bullish. Okay? Makes sense? Hope it makes sense. Let me actually switch to my Discord. Maybe someone ask questions. You can't hear. You still can't hear? Why can't you? Oh my god, bro, that's so frustrating. At least the live, I know in the live it can be heard, but I think I know why. Let me see, verified raw permissions. Is there actually a permission for hearing? Like what the hell? Connect, video. You should be able to hear me. Why wouldn't you be able to hear me? My mic is moving. That's frustrating, bro. Just pausing my live for this. Oh my gosh, bro. Here, I'll continue. Here, what we'll do for now, I'll fix that later. I need to fix that though. We'll join. Well, he can't hear me. I'm gonna text him. Join the VC instead. I'll fix that later. Okay. Couldn't hear me in the stage. Anyways, I'll just continue. I don't know if he's here, but I could just send the video later, so it's not a big deal. I'll be able to hear in the video. So what I was saying though is this is our high and our low in the market. So now this is our range, and what was I saying? So internally we're bearish, but externally we're bullish. That's the last thing I think I said, right? So I'm saying that's the same kind of thing we look for in our strategy, but you know, this is just a breakdown from top down. We went to monthly, right? Now to daily, because that's where we would look for entries based off of the sweep, right? Now, if we look at the daily, stay on the daily, but we look closer at what's actually happening now with the price, right? This high is the range, or sorry, this high of the range, or sorry, this is the high of English. This candle here shows you, right, this is the high of that range. This is the low of that range. Between that price, right, is our range. If we break out of it, then we'll push down, right? But if we can sweep the low, we'll push up. We swept the low and came to halfway of the range, so we would have had our partials. We would have took partials right there, right? On a lower time frame, you would have got your entry down here somewhere, right? You enter here. I think I got stopped out, and then I entered again, and then I would have made money right there, right? Take partials there. And then set stop loss to break even, and then get stopped out. That's fine. We're still looking for buys because the way I look at it, we're in the internal liquidity zone here. This is our FVG, our fair value gap, which is what we also need to look for, right? Either a fair value gap, an order block, an IFVG, a breaker block, right? These are our key levels that we need to be in when looking for entries, not just anywhere. It has to be in a key level. Because if it's in a key level like this, right, this is obviously a bullish key level, and you're looking for sells inside of a bullish key level, you're probably going to get cooked. We're inside of a bullish FVG, right? If this came down here, it would then be a bearish FVG, but it's not. It's a bullish FVG. But then we also have over here a bearish FVG. That's kind of hard to see, but I'll put a box around it. Boom, 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 pow. Okay, so that right there is a bearish FVG. I'll just make it red actually too to make it easier to understand. And I'll remove the fib, okay? That is our bearish FVG, and then this is our bullish one, the blue one, okay? As you can see, inside here, we would have had an entry model as well for this high and this low as our range, and then we would have taken it to the other end of the range. All right, I can mark that up for you right now using a different color. All right, so this high of the range, we'll make it yellow, okay? And then the low of the range, we'll make it yellow. Cool, okay? So we understand we just swept the high right here, right, on a lower time frame for our entry. We have to use our time frame alignment, remember? Right here is the first time price broke out of that range. Right, the yellow lines is our range, high and low of that daily candle, right? So once we broke out of that range, we can understand we need to see a market structure shift first. So once we get price to close there, the first time price closed there, or below there, sorry, is right here. We would have got stopped out actually here, but what I do with my strategy is I get stopped out, I enter again when I get stopped out, and then that's my final trade for the day. So right here, I'll take 2 trades for the day. So even if I win that trade, so I like to take 2 losses. If I take 2 losses, then I'm done for sure. If I take a trade and then I lose and I take another trade right off of that, I'm done with that setup. But if I see another setup, I'll take it, you know, and then if I lose that one, then I'm done for the day. It all depends, right? 2 losses max, but sometimes I'll just end it on a win, and I'll, you know, if I just won the first trade, then I'm done. Sometimes I'll do that as well, right? Because then I won, and that's the setup. That setup, I won the setup. So I look at it as a setup based on not sessions, not daily, but as setup. So per setup, I'll take 2 losses per setup, and 2 losses per session as well, max. So that's a whole nother video, probably another day. I'll explain all of that. Anyways, we close below there, right? We would be setting our limit order here. Sorry, I can't find it right now. I'm tweaking. Okay, so yeah, we would set our limit order here, going for the other end of the range, that yellow line, keeping our stop at a 1 to 4, which is what I do. You can keep it covering this, at least this order block, but you know, whatever you want to do some research though first. So boom, we get stopped out. Oh, this probably would have been double stop out actually. That's lame. So we get stopped out, maybe, let's see. As soon as I get stopped out, I'd enter again. Yeah, I get stopped out again. But like maybe I didn't see it yet. Maybe I get stopped out and price pushed all the way up here, and then it got up here and swept this high, and maybe I catch it somewhere down here when I looked at my phone, and I'm like, okay, I'll take it from here. Maybe I got lucky that way and took it from like somewhere in like the middle over there instead of as soon as you get stopped out, right? Maybe you got stopped out and then you let price ride for a bit because you weren't really looking, and then then you go and you look for a trade, and maybe you get lucky that day. That's why it's all about executions. Like, everyone can know how to trade, but it's about execution and discipline to stop trading for the day, or to not take the trade because it's not your perfect setup. But anyways, as I was saying, is you would enter again, and then you would have won this one. You would have took partials at halfway and then set stop loss to break even. Whatever you want to do, right? I think partials are the best. I would never used to like taking partials. But then it's like when you get to that halfway point where you should took the partials, and then it reverses on you and you didn't take it, then you start to want to take. You know what I mean? You're gonna learn that it's best. It's just best, because you might crash out when you don't take the partial, and then it reverses on you, and you realize you could have made money. You're gonna tweak out a little bit. So it's better to just take the partials and close your phone. Honestly, at the end of the day, you made money. Money is money. You gotta be satisfied with the money you made. You missed it, bro. You missed it, Z. I already kind of explained it, but I mean, you said you were following along, right? I mean, I wasn't really completely done yet, but as I was saying is, we're in this FEG here, this bullish FEG, and we just finished a move that we could have taken from inside the bearish one. So inside this bearish FEG, we could have taken a move from here to here, right? Easily, from the top of this range to the bottom of that range. Boom, boom, done, in and out. But so now it's like, what's happening now, right? Is the question, right? What's happening now? So to break it down, this first range right here, that move is already done. It already got halfway of the range. We took it, stop loss at break even. We would have got, partials, and then stopped out at break even. Boom, done. Money was made. That move is done. Next move would have been from here to here. We would have got out there. Boom, done. Right? And if you missed this one, maybe you got in here somewhere up here instead, right? And then over here, you wouldn't have got involved here because it didn't sweep the low. It actually broke the low, right, and kept pushing. So, and then over here, nothing, right? Because it never came outside the range, right? It never manipulated that low, right? The reason why we want to wait for a manipulation is because there's people that are buying here and their stop losses are here, right? They're buying already and their stop losses are here. They're gonna get stop hunted. Like, some people call it stop loss hunted, but it's just liquidity grab. It's just a liquidity grab to push price in the direction that it was intending to go in. So it can't get tricky. You just have to always, basically at every high and low, there's liquidity. That's the best way I can explain it, is that every single high and low, there's stop losses. There's stop orders there. There's, they're called, there's orders there. There's, if somebody's selling from down here, right, and they're selling, there are stop losses above here, right? So there's buy orders there, right? Especially if you're trading futures, you're gonna understand what that means. If you're not trading futures, you don't understand, like, to get rid of your position, someone has to want to buy it from you, right? So you have to sell it to them. I don't know if that makes sense.
Right.
And vice versa.
Yeah, I was listening. I'm actually I'm on my funded account right now, my newly funded account. I'm up like $200 on I'm on NQ. I'm not watching gold right now, but I know gold is looking to buy right now. Just gonna see what to do.
Yeah, looking to buy for sure, and it got more clear to me when I marked it up again.
Yeah.
Because I didn't mark up my chart really until today. I'm trying to get into the practice of that, because nothing really happens on Sunday. Like, you can still trade, but structure still needs to build up Sunday, Monday.
Right, yeah.
And we're kind of just trapped in here, especially on gold, because we've just been consolidating for a while. Which I don't really care about consolidation anymore because of the way I trade. Sorry, what?
I said, oh no, me either. I don't care about consolidation at all. I'm just here to trade, but I'm here on what was it? On NQ, and I'm on shorts right now. I can share my screen, bro. I'm in a funded position right now. My price is lower because I laid on the risk, so I jumped my price down. But originally, my price was up there.
Oh, bro, I wasn't sharing my screen in here. You didn't even see what I was showing you. Okay.
I didn't see it.
You didn't even say nothing. It's okay. I'll send you the video. I recorded it. I'm watching.
Oh, yeah, I'm in this long position right now. or not long position, shorts position right now. My price was up here, but I laid on the risk after we had this big move. So I feel like we're gonna melt here shortly. It might be later in the day, so I might have to move my stop up above the high, but we'll see how it goes.
Yeah. I'm tired.
Targeting this consolidation here. We should wake up with TP, no problem. Honestly.
Yeah, for sure.
It might be a trade that we have to hold overnight, though. That's the only thing.
Gold
like
too. Gold is doing the exact opposite. Usually it does the opposite.
Yeah, that's what I'm saying. So that's a good sign too that I'm looking at gold buys, and then I get an NQ short. So that's a good sign as well. So we'll just watch it, monitor it, see what she does.
Yeah. And also, if you think about it, right? For gold, for example, where is today? So today, all for New York, right? For all of New York session, we dropped. Right, from 8 a.m. We could even call it 9 a.m. You could just tell we just dropped all New York, okay?
Yeah.
Very obvious that we can agree, right? Now, usually what happens after New York session drop, Asia session rises, vice versa. If New York is going up, Asia session will drop. Not all the time. It's not that easy, but it's a good way to get a strong bias when you remember that as well. You do all your other research, you understand your bias, and then you realize, like, what did Asia session do? Sorry, what did New York session do? Then we know what Asia session is going to do, most likely. Right. Because if you look at the chart here, you can see, like, on Wednesday as well, even, like, on Wednesday, let's look for the last New York session, sorry, which would have been, what, Friday? Friday, New York session. I can't make this shit up, bro, look. Friday, where's 9 a.m.? So from 9 a.m. until, so you can just tell, right? From New York session, we dropped, right? From 9 a.m. till 4 p.m., we dropped. Like, yeah, we kind of came up, then we went down, then we, that's the market. We're going to go up and down, but for the most part, from beginning to end of the session, we dropped. It was a higher price at the beginning of the session, and it was a lower price by the time the session dropped. What happened as soon as, look, 7 p.m., it's not by accident. 7 p.m., we swept the low of New York. Can't make this up, bro. We swept New York low. And immediately sprung up during Asia session. Right. To take out New York high, to take out New York session highs. Bro, I'm laughing so hard. Took out New York session highs, and then what happened during the next New York session? So Asia session took out. So basically, look, New York session, okay. New York session dropped, right, and then Asia session kicks in.
And guess what? New York session dropped again.
Oh yeah, sorry. So what happened was, where's London session? London session lows got taken out. I don't really look at session sweeps, but that's the thing as well. You can look for liquidity inside of the sessions, right? New York high and low. Those are good too, right? But you can see it right here. It's very clear. And it's like, so but it's like, even if you're not looking at it as sessions, you still understand that it's a high that's being swept, whether it's a session high or not. But it's usually, those ones are good because those are the highest points. Those are usually going to be the highest, like, those are going to be your swing points. So, or swing lows even. So, yeah, bro, I'm very, very strong on these bullish, on this bullish bias that I have. And let's see what happens. It's very, yeah. You don't really need to, you just need to understand, like, what the market's doing. Right, we have internal liquidity and external liquidity. I think I explained this to you already, but I'm recording right now, so I don't mind explaining it again. For once, my recordings are actually being smooth, so I don't know if anyone's watching the YouTube live. I have 2 monitors, but I need to have maybe a 3rd monitor or a stream deck to show me stuff like that. If somebody's watching the live right now, I don't know, I don't want to go check right now, then maybe you can learn something. Or if you're watching this replay, you can learn something. We have let's say an uptrend, for example, right? When price is pushing up, as it's pushing up, especially when it's pushing up aggressively, it's leaving behind FVGs. It's leaving behind these fair value gaps off of these impulsive moves. And then from there, I'm trying to find the best way to explain this. Price will come down to grab liquidity from the internal liquidity. And that's why you want to start looking for what price is doing in there. Is it respecting the FVG, right? Are we getting lower time frame bullish movement, right? On a lower time frame, right? Like what's happening inside of here on a lower scale, right? To give us hints as to if it's going to keep that or if it's going to break it. Because if we're still bearish on a lower time frame, it's mostly going to keep the momentum pushing down here until before you know it, now we have a IFVG instead. Which is why you always have to be able to switch your bias at any time. Because the market's not going to just go like this the whole time. That would be way too easy if it was just that simple, right? If it was just high internal liquidity, right, gets taken, external liquidity gets taken, and it just repeats that over and over again, it would be way too easy. You have to constantly be ready to switch it and not be emotionally attached to one side. It's just like, okay, boom, we are in the FVG. We understand it's bullish, right? We understand now we have liquidity sitting here, right? We have stop losses here from people selling this, believe it or not. Right? People are selling this and their stop loss is sitting here. Stop loss gets taken out, right? Now we have buyers in here, right? With their stop losses sitting down here. Which is why you also have to also be careful of that, right? It might not get taken out right away, but it's resting there. It's ready.
I might have to put partials up just in case it comes down while I'm asleep.
What do you mean? Like you're gonna have a limit order for partials?
Yeah, just a little limit order.
Futures is kind of not confusing, but it's scary sometimes. Sometimes you'll do like a limit order. I'll do like a limit order or something, and then it will take it. But then if I'm not looking or watching, it's like it enters another position or something. It's so weird. Does that ever happen to you?
Yeah, sometimes you gotta make sure, because sometimes if you're not, you gotta make sure you press the right one, because I've done that before, just pressing buy, and I'm actually in a long position, and I meant to press like a sell limit so I can take positions off. It does that sometimes if
yeah, you get the yeah it can get confusing a little. So the last analysis I had was a 4-hour and the daily. They both were showing me bullish entries. Right, this was the daily. Right, we swept below the daily. If we go to the 1 hour, you can see that is where we got tagged in. So we're around our entry price right now. We're in a little bit of drawdown. But this is our entry right here. Boom. Taking it to not just there actually, to be honest, but to the external range liquidity that's resting here on the daily. Or you could even take it to this external high up here. Because you can see, like, look, there's all this. See the FEGs inside here? There's FEGs in here. Boom. Boom. You can just pair those two together, to be honest. Just call it one big FEG. So internal liquidity got taken. External liquidity is still resting here. We're bullish. We took internal liquidity. External liquidity sitting here. So that is the ultimate goal, actually, is that high up there. So you would be aiming for that high. At the very least, you can aim for even just... I hate when this happens. Keep pressing the freaking drawing tool. Okay. At the very least, you could just aim for that range high, the yellow line I have drawn, just that that daily candle high. Or you can aim for that daily candle high that we failed to reach the first time, but maybe you can get it the second time, and maybe even up here. So basically 3 TPs, TP1, TP2, TP3. Or to keep it simple, you could just have this be TP1 with your partials at halfway. Oops. Yeah. So what would that look like? Entry here. TP up here. The stop loss would be down here. Which is what I think I have on right now. No, I think I took the 4-hour entry. I don't know. I'm getting tired, to be honest. Can't explain things much more. I have to actually get off of this and just relax now, you know? You can't be on the charts for too long, bro. You gotta relax.
Yeah, I'm gonna just let this ride and relax, man. I'm gonna talk to you, bro.
You're gonna play Madden?
You already know. I got the new one, NCAA 26.
I'm gonna end the stream, and then maybe I can clip that. I can clip that later. I want to get